In today's market update, we're going to be taking a quick look at the set of instruments that we've been discussing in recent market updates, not because I intend to limit these updates to this group of instruments, but because I think there is some benefit to tracking an analysis over time and understanding how we confirm or adjust our analysis as time passes. So starting with the S&P 500, this is SPX data, and you will know if you've been looking at recent market update videos, I would encourage you to take a look at those so that I don't need to repeat myself in each and every video, that we have been discussing the possibility that the 20-week cycle trough that you can see in this analysis has now been found to have occurred in the middle of April at this fairly prominent price low over here. We have been discussing the possibility that that 20-week cycle trough could have occurred as a straddled trough earlier at perhaps this position over here in the middle of March. Now that we have a fairly strong price move up out of the trough in the middle of April, it seems absurd to consider the possibility that the 20-week cycle trough could have occurred in March. But that possibility is not eliminated yet. It does seem likely that the 20-week cycle trough has occurred as indicated in this analysis in the middle of April. But we do still need to keep an open mind in terms of the possibility that the 20-week cycle trough did occur as a straddled trough, which I discussed in detail in last week's market update video. And as discussed in last week's market update video, we were of course expecting a trough, and I mentioned that it would either be a trough of the 20-week cycle, which is indicated in this analysis, or a trough of the 40-day cycle, considering the possibility that the 20-week cycle trough in fact occurred here in the middle of March. So how are we going to confirm the magnitude of this trough? As you can see, the diamonds that have been placed at the foot of this chart are hollow. They are not filled in. In other words, this is the most likely analysis according to Sentient Trader, but the 20-week cycle magnitude of this trough is not yet confirmed. The way in which we will confirm the magnitude of this trough is by watching the way in which price interacts with our cycle tools. In particular, of course, I like to watch the FLD, or future line of demarcation. Here we have three FLDs plotted on the chart. This is the 5-day FLD over here, the 10-day FLD, and the 20-day FLD. These FLDs are in what is called a cascade pattern. In other words, they are all falling a little bit like a cascade of waterfalls. And price has crossed up so far through each one of these FLDs. As it crosses above an FLD, or I should say as median price crosses above the FLD, it generates a target to the upside. Price is still reaching up towards the target generated by crossing the 10-day FLD, and it is now possible that the 20-day cycle FLD has also been crossed to the upside. I am recording this video before the US markets open, and so we have a little bit of pre-market action from Sunday night trading, and so this is not yet a complete bar. But unless the median price of today's bar ends up below the 20-day FLD, in other words, all the way down here, then median price will have succeeded in crossing above the 20-day FLD. We can only generate a target after price has crossed the FLD, in other words, after today's price action is complete. But barring any great surprises in today's price action, we can estimate the position of the 20-day cycle target, and that is at a level of about 52.50. In other words, over here. So let's get back to how we are going to confirm the magnitude of this cycle trough. If price is bouncing out of a 20-week cycle trough, then we would certainly expect it to achieve the target generated by price crossing the 20-day FLD. And therefore we would expect price to reach up and achieve that target. If price was only bouncing out of a 40-day cycle trough, then we would also expect the target to be achieved, but we would not expect it to be exceeded, and price might struggle to achieve that target. And so there is the answer to our question. The way in which price moves up to achieve this target will inform the magnitude of the trough out of which price is bouncing. As a matter of interest, if this is the 20-week cycle trough, we would expect some symmetry as price bounces out of this 20-week cycle trough. If we get symmetry of this downward price move followed by an upward price move, then we would be confirming the 20-week cycle trough as having occurred over here. Of course, that symmetry could extend even further with a double peak forming and then price moving down to reflect this upwards price movement over here. But before we anticipate that downward movement, let's see what happens in terms of price achieving its target. The next times to watch out for in terms of troughs are this 40-day cycle trough expected at the beginning of June, and then this 80-day cycle trough expected in about the middle of July. Taking a quick look at the Nasdaq, we have exactly the same situation as we have in the S&P 500, with the potential 20-week cycle trough having formed over here in the middle of April. In last week's market update, I pointed out that on the weekly chart, we would expect the 20-week cycle trough to form as price finds support at the level of the 20-week FLD. Here you can see that last week price reached back up again to the level of the 20-week FLD, which is this green line over here. And if price continues to move up, which is expected if the 20-week cycle trough has formed, then we will look back and we will say that the 20-week FLD provided approximate support at the time that the 20-week cycle trough formed. And that is what we would expect, of course, in our sequence of interactions between price and the FLD. On a daily chart, we can also not confirm the target generated by price crossing the 20-day FLD, which it seems to have done over the weekend, but we can estimate a target which is just over here above 18,400. The interesting thing about that is that, of course, we will be looking at a similar level as the peak that we saw in the end of March. Again, we're going to be watching the way in which price achieves this target. If it achieves the target quickly, then we will be more confident in positioning the 20-week cycle trough over here in the middle of April. We are again looking at the next 40-day cycle trough occurring at the beginning of June and the 80-day cycle trough occurring in the middle of July. Recently, we've been looking at the Australian market. This is the ASX, and the Australian market has an analysis that suggests the possibility more clearly that the 20-week cycle trough did in fact occur in the middle of March, and that what we have seen happen since then has been a 40-day cycle that has played out to this trough over here in the middle of April. You can see that this analysis is still valid, but we do also have the same debate in the Australian market. Is it possible that the 20-week cycle trough actually formed over here and that it should not be considered to have formed in the middle of March? What are the implications of this possibility? If the 20-week cycle trough formed in the middle of March, as discussed, then it is clearly what would be called a straddled trough. And that has bearish implications, as discussed in last week's market update video, because we would now be on the downward side of the straddled trough, focusing on the next 40-week cycle trough expected to form in about the middle of July or perhaps early August. If this is the first 40-day cycle trough that has formed, we would not expect a very strong bounce out of this trough because of the bearish implications of the straddled 20-week cycle trough. However, if the 20-week cycle trough is the trough that formed in the middle of April, then the situation changes. It doesn't change very much as a matter of interest. All that we would do is that we would claim this as the first 20-week cycle. We would expect a stronger move out of this 20-week cycle trough than if this was a 40-day cycle trough forming now. And then we would still be looking at price moving down into the 40-week cycle trough in the middle of July or early August. So let's focus on the detail for a moment and take a look at our 20-day FLD. The The interesting thing about the Australian market is that it has so far failed to bounce out of the trough that formed in the middle of April with much conviction. It came up to the 20-day FLD, but instead of crossing up above it, experienced resistance at the level of that FLD. That was a fairly bearish sign. In today's price action, and the markets in Australia are in fact already closed, so today has been a bullish day, you can see that price has succeeded in getting up above the level of the 20-day FLD. The target generated by median price crossing that FLD is not a very impressive target. Let's change this chart to display median price. And here we can see that median price has just crossed up above the level of the 20-day FLD, providing us with a crossing point at this level over here. Let's change back to our candlesticks. And you can see that the target that is generated by this price cross is a not very impressive one. I don't think it quite reaches up to 77.50, perhaps 77.45. Now, it could be that we are going to see a delayed bullish reaction as price bounces out of this 20-week cycle trough, or I should say potential 20-week cycle trough, and that after a fairly disappointing start to the 20-week cycle, we are going to get some enthusiastic bullish movement. If that happens, then we will change our analysis and position the 20-week cycle trough over here in the middle of April. But if price only just achieves this target of 77.45, we are going to have to continue to consider the possibility that the trough that it is bouncing out of is only a 40-day cycle trough. We have similar times to watch in the Australian market with this 80-day cycle trough expected towards the end of May or early June, and then we have the next important trough occurring at the end of July. The DAX provides an interesting variation on the theme. The analysis is much clearer in the DAX than it is in any of the other indices. We have the same 18-month cycle trough over here in October of 2023. We have the 80-day cycle trough over here in the middle of January. And you can see that the recent trough in the middle of April has been found in this analysis to be a trough of the 20-week cycle. Because of the principle of commonality, the principle that Hurst introduced in the 1970s that states that markets move with a great deal in common, or specifically that the cycles of troughs tend to occur at about the same time in different markets around the world, this increases our confidence in the fact that the 20-week cycle trough has formed in these markets. You can see that in the DAX, price managed to get up above the 20-day cycle FLD last week, and it has generated a target to the upside. Similar to the other markets we looked at, that target is a match of the previous high in March, and so we will be watching with interest to see how price achieves that target. It is worth pointing out that this 40-week cycle circle and whiskers is clearly misplaced. Why is that? It is because of the fact that the circle and whiskers is calculated on the basis of the recent wavelength of this cycle, the 40-week cycle, which, as I've mentioned in previous market update videos recently, has been compressed because of positioning the 18-month cycle trough over here in October of last year. If we zoom out quickly, you can see that compression with an 18-month cycle trough, or potentially a much greater magnitude cycle trough that formed at the end of September 2022, and here is the next 18-month cycle trough in October of 2023. That is a very short 18-month cycle, only a little over a year long. In order to achieve those shorter cycles in the analysis, all of the cycles have been compressed, and that is why we have this circle and whiskers for the 40-week cycle so displaced to the left. Of course, the shorter cycles are the first ones to react to changes in cycle wavelength, and so when you see the circle and whiskers for a longer cycle, as I've mentioned before, I tend not to take it too seriously. And for that reason in Sentient Trader, we can hide the circles and whiskers and diamonds for the longer cycles and reduce it to a point at which we have more confidence in the analysis, which is at this level over here. You can see the very clear nest of lows for the 40-day cycle at the beginning of June. And here is the 80-day cycle, which has its next trough due in the middle of July. Taking a quick look at gold, there is not very much to say about gold. In last week's market update video, I pointed out that the 80-day cycle trough was lying ahead of us and that price was expected to come down below the 20-day cycle FLD, at which point it would generate a target to the downside. You can see that over the weekend, not last weekend, but the weekend before, price did cross down below the 20-day FLD. It generated a small target to the downside, measuring from the previous peak to the crossing point and extending it down an equal distance. That target was 23.11. I think I'm correct in saying. Price came down just a little below that target and has since been struggling to bounce back up again. It is very possible that the 80-day cycle trough has therefore formed over here. The next thing that we would expect from gold is that price should cross up above the 20-day FLD, generate another target to the upside. But at this point we need to ask ourselves, is this 80-day cycle trough going to turn out to be a subtle trough? In other words, price has only moved down a little bit into the trough and then is going to bounce out with enthusiasm? Or is there the danger that this is also going to turn into a straddled trough? A straddled trough is one where the trough ends up being the center of a fairly symmetrical price action. Let me change the scaling on this chart and demonstrate the difference between those two possibilities. On the one hand, if this is a subtle trough, then we would expect continued upward price movement. On the other hand, if this is a straddled trough, then we would expect this, as mentioned, to be the center of a symmetrical price movement, warning that not now, but fairly soon, the price of gold is going to turn down. We cannot provide the answer to that yet, but we need to watch price action fairly carefully. I should point out that here we are looking at the trough analysis of gold, and as I've mentioned, it's useful to keep track of the peak analysis in gold as well. Let's take a look at the composite model line in gold to gain an understanding of what the cycle analysis is telling us to expect from price action. Here is the composite model line based only on the trough analysis. You can see that our expectation here is that price is now bouncing out of an 80-day cycle trough and we are going to get a continued bullish movement. In other words, this will turn out to be a subtle trough, but probably not a straddled trough. However, if we also include the peak analysis in the composite model line, and let's quickly display the peak analysis, you can see that the peak analysis suggests that a 40-week cycle peak has formed over here. If we include that information in the composite model line, then we get a very different situation, and it is one that we should pay attention to. This suggests that this 80-day cycle trough will be straddled in gold. In other words, we will see price bouncing out of the 80-day cycle trough, but because of the influence of the cycles that are potentially synchronized at their peaks, which are important cycles to bear in mind when tracking the price action of gold, then we would not expect further bullish movement because of the magnitude of this peak being a 40-week cycle peak, and therefore those cycles are going to push price downwards. And so what we will be doing with gold this week is watching the 20-day FLD over here, witnessing the point at which price crosses above the 20-day FLD, if it does, and generating a target as a result of that. Or if the FLD does not get crossed, but instead provides resistance, we need to stand by for some bearish action in gold. Finally, a quick look at Bitcoin, and Bitcoin has also been providing us with a bit of an anomaly, as we've discussed in recent market update videos. It is possible that the 80-day cycle trough occurred over here beneath the 19th of April, which was when the halving occurred, or it is also possible, as discussed in earlier market update videos, that the 80-day cycle trough actually occurred early over here. You can see that the more obvious position for the 80-day cycle is at this trough over here on the 19th of April. But if that is the 80-day cycle trough, then price should have crossed up above the 20-day FLD. Notice this very bearish interaction with the 20-day FLD. Let's in fact zoom in and take a closer look. Price came up to the 20-day FLD last week, and if this was a trough of the 80-day cycle as presented in this analysis, we would have expected price to cross up above the 20-day FLD and provide a target to the upside. You can see that it spent pretty much the entire week finding resistance at the level of the 20-day FLD, and it is not looking much better so far today. This calls into question positioning the 80-day cycle trough over here. Given the difficulty with positioning the 80-day cycle trough, I think we need to start looking ahead to the next important trough, which will be the 40-week cycle trough, which you can see is this nest of lows over here. Again, we have a fairly displaced 40-week cycle circle and whiskers, but the rest of the nest of lows is fairly centered around the beginning of July. A few interesting bar counts or day counts that we should watch out for are, first of all, the average length of the 20-week cycle, which is 136 days. That will be on the 7th of June. And so given our uncertainty around the position of the 80-day cycle trough, early June will be an important time to watch for Bitcoin. Another date to watch is the potential repeat of this fairly prominent cycle, which could have been an early 80-day cycle trough that formed over here in the middle of March at 57 days. If we double that, we get 114 days, and if that 57-day cycle is active, which it certainly seemed to have been in the first few months of this year, we should start paying attention in about the middle of May for the formation of the next cycle trough. The interesting thing about that range of time from 114 days to 136 days is that we have the circle and whiskers for the 40-week cycle trough right in the center of that time, as well as a nest of lows for the 40-day cycle over here in the last week of May. And so I am going to be focusing on this time and watching for the formation of a cycle trough around about then. Of course, if we get a delayed bullish reaction now, then we will confirm that the 80-day cycle trough has formed there. If we do not get a bullish action now, we are going to be focusing on this time towards the end of May and watching for the formation of a potential 40-week cycle trough at that point. I do hope you found this market update useful and interesting. If you have any questions, please put them in the comments below the video or join us on our Hurst Cycles Discord server. I look forward to hearing from you.